Welcome to The Investor, a podcast where I, Joel Palafinkel, your host, dives deep into the minds of the world's most influential institutional investors. In each episode, we sit down with an investor to hear about their journeys and how global markets are driving capital allocation. So join us on this journey as we explore these insights. All right, so we're live here with a good buddy of mine. His name is Akira Dunham. He's just a train ride away from me. I'm in New York. He's in Connecticut. You live in Connecticut, Akira, or you live in the city? Okay. How many people live in the city and commute to Connecticut every day?
That's a good question. It's becoming more popular, I would imagine now. Obviously, there's a good scene going on in Stamford, but the reverse commute's definitely less popular, less crowded than the commute the other way around.
Oh, I bet. Well, glad to have you here. For the audience, Akira is at CTI Innovations. It's essentially the venture arm of Connecticut State. So excited to go deep on, your career, kind of the ecosystem in Connecticut, and just kind of higher level trends that you're seeing. But before we do any of that, let's learn a little more about Akira. So let's talk about who you are, where you grew up, maybe a little bit about your family and how you broke into venture. I think that'll be a good start. And then we could just go on tangents if we need.
Totally. So grew up, was born and raised here in Connecticut. Spent most of my childhood here. Had a fantastic upbringing. My mom grew up in Japan. She was born there. My dad's from the States. So having a multicultural background definitely helps, shape the world that I look at today. Grew up, spent lots of time with my grandmother on my mom's side. She had spent a lot of time growing up in Japan. She was there for, the tail end of the war there. So, just having a lot of unique backgrounds and perspectives on things really shaped the way that I view the world. As I kind of began to get older and start thinking about what I wanted to do from an academic standpoint, was really interested in the future of the built environment, future of cities. Something that I was always fascinated in, how people move, mobility, how cities are built, public transportation, these types of things. It was a strong intellectual curiosity to kind of pursue these avenues deeper. So decided to study civil engineering, spent 4 years at the University of Connecticut, getting my bachelor's in civil engineering, also did a master's more focusing on transportation and urban engineering. While at school, I was involved in research on the transportation side of things. So things such as autonomous vehicles, public transit networks, bus systems. That's where I spent a lot of my time, focusing around. Obviously, some of the other core civil engineering requirements as well, structural engineering, geological engineering, that kind of thing. But that's transportation is always something interesting to me, is why I chased it. I've always been someone that wants to pursue my intellectual pursuits to the highest degree. Unfortunately, for that, I quickly realized that the world of urban planning, urban design is quite a bureaucratic and slow place, as you see in the U.S. Our infrastructure is lacking, and a lot of that is due to kind of the bureaucracy, that persists in this industry. Very hierarchical in the workplace. It's not really a merit-based, environment. So it lends to a lot of the issues that we see today. So very inefficient form of capital allocation. I was looking for something that would, kind of be the opposite of that. I got introduced to UConn's student-run venture capital firm while I was there, called Hillside Ventures. It's a $1 million student-run fund. The firm, puts in $25,000 checks into a couple different verticals: insurtech, sustainability, and the other one would be edtech. And that was a great learning grounds for what is venture capital. How do you identify strong business opportunities? How do you source those deals? How do you diligence those deals? And ultimately, how do you close those deals? And that was really my first taste in venture, right? I think it was a great opportunity set up by the Worth Institute at the University of Connecticut, which is a very entrepreneurially focused department within the university. So it's giving students a lot of exposure to things that, many people could never dream of, getting, insights into at an undergraduate and graduate level. So that was really my first kind of launch pad into venture. Really was able to kind of expand my network from there, meet a lot of founders and investors on both sides of the table that, allowed me to open up some doors. One of those doors ultimately ended up being Connecticut Innovations, which is the strategic venture capital arm of the state of Connecticut. Obviously, me being a student at University of Connecticut, there was a lot of synergistic ties there. We've looked at deals together. We've done deals together. So that was kind of the intro there. Was able to kind of work my way into an internship position during my graduate year at UConn. and then ultimately parlayed that into a full-time role. So currently working on the tech team at Connecticut Innovations. We're 500 million assets under management currently. We're a very generalist fund, so we invest across the table. I primarily separate the two buckets into general tech and life sciences. I work on the tech side, and then within tech, we obviously have consumer packaged goods strategy kind of starting to develop out of that. We've also recently launched a new $100 million climate tech fund within the tech side, as well as a $50 million future fund for diverse and underrepresented founders. Obviously, with the small amount of dollars that are going to underrepresented groups, CI wants to make sure it's a core part of the focus to ensure that founders, regardless of their socioeconomic or ethnic backgrounds, are able to kind of get access to the capital that they deserve to build companies. So that's kind of on the tech side. Our check sizes can range anywhere from 100K to 2.5 million for a first-time check. We reserve up to 10 million for the life cycle of a business. We're an evergreen fund, so we're not rushing our companies to the exit gates. We can be patient capital partners along the way. I think that's one of our core value propositions to founders that we work alongside. Primarily focusing on pre-seed to Series A right now. Obviously, we follow on, so it can continue down to the later stages as well, and we even keep shares as when companies go public. So yeah, kind of a unique strategy there. We also do venture debt as well for cash flow positive businesses. We have a fund-to-fund strategies as well, where we're investing in GPs that are headquartered here in the state of Connecticut. A few years ago, the venture landscape in Connecticut was quite bare, and I think people can be quick to write it off as Connecticut not really being a hub for venture capital. But we've really built out this program, and now we have over 10 plus funds that are located and operating here in the state. And for a state that small, I think it's quite an accomplishment. So we have a bunch of different unique strategies that are going on. Happy to explain more, but maybe we'll pass it back to you for further questions on anything that I just mentioned.
Absolutely, yeah. So one of the first things that I'd like to unpack is what helps you differentiate with an evergreen fund. What helps you differentiate kind of the decision making for a 100K check versus a $2.5 million check? Is it the capital intensivity? Obviously, if you're investing in a space company, those companies are going to need a lot more capital, and the typical investors, and the minimum check size is going to be probably at least 1.5 to 2 million versus like a typical pre-seed to seed company. So is the lever the industry, the tech, the capital intensivity, or is there also other levers in terms of like how much ownership you want to have? I guess how do you guys decide, hey, is this a 100K check, 250K check, 500K check? Because usually for funds, right, like that have a fixed term fund, they have to kind of do their portfolio construction, right? They know exactly how many investments they're making. If they have a follow-on strategy, that's a certain percentage of the fund as well. So that was just something I was curious about as you were sharing that.
Yeah, that's a very good question. I think kind of we're in a unique position, right, where we don't have any LPs to distribute distributions back to. So we don't really look at portfolio construction and even capital allocation in the same way as a privately run fund. We're not looking for ownership targets. We're not looking for, kind of to have a barbell strategy, or, we're looking to find the best opportunities that make sense for Connecticut Innovations and our mandates, and companies that we ultimately feel that we could help with our value propositions, which I can explain more about later. But so we kind of operate, I think where we do the best is kind of getting companies their first round of capital. We want to, we'd like to prefer to be a company's first institutional check. I think that's where we provide the most value due to our kind of large portfolio size and just the volume of transactions that we're doing. We're kind of inherently more passive in ways. So we don't necessarily take a lot of board seats. We tend to be more board observers and more passive investors in that sense. But we like to, make sure that every single high growth and high potential company in the state of Connecticut has our backing, right? So we may not be the biggest check in any given round, but we're, partners that can be there the entire way, and we're not going to fold when the times are tough, and we'll stick with the companies that we like and the founders that we like through thick and thin.
And do you guys invest internationally too, or is it mostly just, is there a priority for Connecticut? Or are you guys pretty global, or are there certain regions that you guys prefer to source and screen and deploy into?
Yeah, we actually have I'd say about maybe 10% of our portfolio right now is internationally based. We
Hmm.
view our international strategy as a way to get exposure to new markets where there's really good talent and kind of bring
Yeah.
their businesses to market through the state of Connecticut. I think geographically positioned between New York City and Boston, being a very livable state, I think is enticing for international founders and businesses. I think the two geographic
Hmm.
areas that we kind of focus more closely on would be Israel and Toronto. Obviously, the Israeli entrepreneurial scene is robust and as strong as it gets. And then obviously Toronto, right, is a very diverse tech hub where you get immigrants from all over the world coming to Toronto to build businesses. The academic landscape there with University of Waterloo, University of Toronto, you have unbelievable engineering talent there. And I think it's a bit overlooked in that sense. So yeah, those are the two
Yeah.
cities that we focus on in terms of, investing in companies and then bringing them to market in the US via Connecticut. So that's kind of, is one of the core tenets of our strategy at CI.
And tell me a little bit about what you're excited about. So I know you had an early interest in urban planning, and looks like you've also had some interest in deep tech. So what are kind of the areas that you're really just excited about and just kind of seeing as the next wave in
Yeah.
technology
I mean,
opportunity?
I think it's an exciting time to be, on the forefronts of tech, right? With everything that's
Hmm.
going on in the world today, and all the
Yeah.
progress that we've made in the last 2 decades or so. It's an unbelievable time. I think the areas that I'm most excited about right now would be energy, material science, and ultimately Bitcoin. I think those would be the three biggest ones. To a lesser degree, also interested in fintech, and prop tech as well. But those are kind of the sectors that I've gone to kind of get deep on
Yeah.
and help shape the way I view the world.
And tell me more about your thesis on Bitcoin. So are you talking about tools to kind of monitor the currency better and just kind of better infrastructure? I guess if we were to go maybe one or two levels deeper, tell me what excites you about Bitcoin in general. I mean, besides the price surging for and the
Right.
halving coming up, but as an investor, are there certain kind of picks and shovels plays that you're looking at?
Totally. Yeah, I think that's exactly it, right? I think the infrastructure around it, how to make it easier for everyday people to interact with the Bitcoin network, I think is crucial,
Yeah.
and I think there's going to be massive opportunity there. Still trying to identify where the value will accrue ultimately, but things like non-custodial wallets, things like Lightning Network or layer two Bitcoin
Hmm.
infrastructure to allow for increased transaction volumes on the Bitcoin network, I think are the two more interesting areas that I would want to dig into. But ultimately, like the core value propositions of Bitcoin, of the potential of being a global monetary base layer for financial transactions, having that kind of censorship resistant, monetary network is a remarkable concept. And to be able to have
Yeah.
that be cross border, to be able to be not manipulated by any central bank or governing body represents a massive opportunity to kind of level the playing field for billions and billions of people across the world, and then creating the infrastructure that will allow those people across Africa, across Southeast Asia to kind of engage and interact with Bitcoin. I think presents an unbelievably large opportunity for investors.
Yeah, and then the on the fund side, because it sounds like as a state plan, there's asset allocation strategies across all these different funds. With one of the funds being a fund to fund, what are some things that you guys are thinking about when deploying into fund managers? Is there a certain vintage or just stage that you're looking to get into? You guys looking into getting into like fund two, or are you guys looking at just emerging managers mainly? Or is
I
it
think we'd
just all
prefer
across the board?
Yeah, I think we'd like to have a diverse portfolio on the fund side. I think emerging managers definitely stand out to us as being the most enticing targets, right? We wanted to kind of develop this venture
Yeah.
ecosystem in Connecticut, and I think the best way to do that is
Mhm.
investing in new and emerging managers that are located here in the state. In terms
Yeah.
of investment theses, we like to be broad and have a diversification there, right? Consumer
Mhm.
tech, bioscience, deep tech, making sure we're kind of getting exposure to a lot of different sectors. And ultimately, I think the strategy is very synergistic with what we do in our direct investments, right?
Mhm.
Our GPs that we back, can be kind of the first line of defense for when we look at investments in areas where we're not as well versed in, sharing deal flow, sharing notes. I think it's been very helpful for CI to have that kind of pool of network and being exposure to the networks of the GPs that we invest in. So the strategy is still kind of getting built out. It's still in its infancy stages. We're going to hope to continue to invest in GPs over the next 10 years. But I think it's a really strong point for our team going forward.
And with the funds that you guys have invested in, are there certain sectors or just trends that you've seen in terms of like the funds that you ended up backing? Like, are there, I mean, I can imagine some of them being urban planning focused, infrastructure funds. But has there been some type of mandate that you guys have been looking for? Or you just kind of, just do the due diligence and go through the DDQs and all that stuff? I guess, do you have that formal DDQ process where they got to fill out all the, questionnaires and all that too? Because I'm assuming, because you guys are more of like an institution, there's more of a formal process.
I would say it's not overly formal. I mean, it's very opportunistic, who we come across. We prefer for funds to not be completely overlapping on each other in terms of strategy. Some of the funds that we invest in are generalists, so there is some of a natural overlap there, but we want it to be, diversified there. In terms of how we evaluate and diligence these companies, is ultimately like it's very qualitative in the sense that, okay, like, do we trust these managers to make the right decisions? Do we, trust them to kind of stick to their guns and be able to, have conviction in their thesis through up and down markets? Portfolio construction strategy, reserves for follow-on funding. Those are some of the key things that we try to look at. Networks of the investors, who do they know? How are we going to ensure that they're going to get into the highest quality deals possible? Those are the primary things that we look for, I'd say.
Yeah, no, that's helpful. I mean, that's, I think strategically looking at, co-investment opportunities, I think is definitely helpful, because that's how you're really going to compound your wealth, because you get access to those deals as like a sidecar or just kind of a separate opportunity.
Right.
So, totally agree with that. And, do you have any advice on portfolio construction? So, with all the funds that have kind of gone through our community, there's different percentages, right? So, I've seen follow-on reserves, and it also depends, I think, if you have a concentrated strategy or not, right? So the funds that are more of a concentrated strategy, where they're only making like 12 investments, super concentrated, their reserve is going to be a little higher, because it's they want to have a lot more, reserve to be able to have those high conviction, small amounts of deals within the fund structure. But I've seen, if there's more investments, I've seen the reserve just by default be less. So I don't know if you had any advice or just kind of observations in terms of maybe the follow-on and then also portfolio construction.
Yeah. So to start with portfolio construction, I think there's no right way to go about it. I think you can make an argument for and against, right? The spray and pray model, like getting high volume, getting just number of deals done. I think, obviously there's going to be a percentage of that portfolio that doesn't go on to raise that next round. And I think for each given next fundraising round, that number shrinks and shrinks. So you want to make sure you have enough shots on target to have enough companies that are at that, Series D, especially if you're an early stage fund, Series D and beyond, the growth equity and, opportunities to have that big IPO. I think you need the shots on net to be able to do that. That being said, the argument can be for concentration, right? Where you really have high conviction in the smaller amount of opportunities, and you have greater ownership there. So when you do have a big outcome, it's quite large and significant. In terms of follow-on strategy, I think one thing that I've really leaned towards is preserving more for follow-ons. I think getting closer to 40%, 30%, even 50% reserves for investment, I think is a wise strategy, especially when the state of the market can be in such flux. It's important to have that cash on hand to really like double down on your winners. I think keeping reserves solely for just pro rata investments across the board is quite lazy. I think it's important to kind of highly concentrate those reserves into a set few amount of companies that you really have high conviction in order to get those kind of asymmetric upsides and investments there.
Yeah, no, that's helpful. And just tell me a little more about the community where you're situated. So what part of Connecticut are you guys in? And just tell me some exciting stuff that you've been seeing with the ecosystem there. I'm assuming there's, a tech hub that's kind of booming, and there's probably a lot of people that work in New York that live in Connecticut. So just after work, they come home. I'm sure there's like community events and stuff like that. So I guess, and maybe tell us about the community. Maybe there are like community events that you guys are hosting, throughout the year that we should be aware of as well.
Yeah, I can plenty to discuss there. So our headquarters are in New Haven. That's where I guess kind of the epicenter of our activities are. Obviously, we partner close to.
That's not too far from. I guess that's where Yale is, right?
Correct. Yeah, we're not too far from the Yale campus at all, so we have close ties there. We also have an office in Hartford and an office in Stamford. So we have the three larger cities in Connecticut kind of covered. Hartford being the insurance capital of the world, obviously with Travelers, Cigna, Aetna, United Health up there. There's a strong insurtech community there of startups. In Stamford, we're kind of leaning towards more of a fintech angle here. This is where I'm located today. Obviously, Digital Currency Group is headquartered here in Stamford. And then there's a strong fintech community here. And I think that has to do a lot with the proximity to the city. But I'd say that's kind of like sector by sector where we break down. Also, a big new advancement that we've been supportive of is Climate Haven, which is a new incubator accelerator in New Haven, run by Ryan Dings, who came down from Greentown Labs up in Boston. He was running that up there. He decided to join us and start a new initiative with Climate Haven. So they just opened up a brand new space in New Haven where a lot of companies are working out of down there. The hopes is to ultimately raise a fund and be able to invest in these companies out of there. But it's been a great way to kind of get the climate tech ecosystem off the ground here in Connecticut. It's a place where they hold events, where they get stakeholders to come together. So we're really, really excited about that. I can speak less to it, but the biotech scene in New Haven obviously has been booming. That's been where a lot of our success as a firm has come from. Me not being involved in the life sciences side of thing has been kind of, don't spend as much time with it. But from everything that I'm hearing, it's definitely a booming time for the biotech ecosystem there in New Haven. So overall, lots of things going on. A lot of startups are really kind of getting their roots settled up here in Connecticut. I guess one more thing I would add is the Connecticut with Yale and UConn partnering together, going after a large NSF grant for Quantum CT, which is an engine program for advancing the interests of quantum technology and quantum computing here in the state of Connecticut. There's a big quantum computing company in New Haven called Quantum Circuits. So we're hoping to kind of build that ecosystem up. We view that as a frontier technology, kind of similar to frontier and platform technology, similar to how AI has kind of taken the spotlight in the last 2 years. We view quantum as something that large corporation, Fortune 500s, all the way down to your layman are going to want to learn more about in a few years. So we want to be a little bit ahead of the curve there and make sure that one, we win this grant, but we can build that ecosystem here in the state.
What do you need to build? Do you need to build a quantum? Because I've seen a couple of those quantum machines here in some of the climate labs that we've had. So what would you need? Would you need like a quantum machine and kind of like the infrastructure and like a data center to be able to incubate startups there? Is that kind of the opportunity?
Yeah, I mean, obviously you need a lot of smart engineers, and we're lucky enough to have Yale and Dr. Robert Scholkopf, who's one of the leading researchers in quantum, computing here in the state. He's the chief scientific officer at QCI. In terms of what we would need from an infrastructure standpoint, I mean, obviously lots of access to capital, but more importantly, like the materials and technology needed to create the hardware and the environment where superconducting quantum computing can happen. Obviously, in order to have that environment, you need very cold temperatures. So yeah, lots of lab space, lots of money, and ultimately the materials that are needed to kind of test, build, and then scale these systems.
Yeah, there's been a few fund managers that I've known that have had just a very narrow thesis, just only on quantum. And what I've seen is right now the opportunities are kind of in photonics, some radar technology. So it's kind of like parallel or like adjacent technologies that could leverage some of the quantum technology. But then I think if there's at some point some type of like open AI type of open platform that can kind of use the cloud to kind of scale simulations or something like that, I think there could be applications to like material sciences to kind of run simulations and stuff like that. But like, totally. Do you think you can go maybe one or two levels deeper on kind of, because I kind of stepped away from quantum in the last like maybe year and a half. So I feel like I'm behind, but I don't know if you have any other insights on it. But there was one company that we passed on that was essentially like a consulting company. And they kind of posed as like a quantum company. So then after that, I just kind of stopped going down the rabbit hole. But with some of these innovations, I guess what are some of the industries and trends that you think are not 10 years away? What are kind of like the low hanging fruit opportunities that you're seeing, or are there any startups that are kind of innovating in that space now?
Yeah, I think commercial applications, it's really hard to put a date on when
Hmm.
this is when this is a very tangible opportunity, kind of that reaching that quantum advantage point where actually
Yeah.
using quantum computing is advantageous or
Hmm.
it can only be done by a quantum computer as opposed to classical computing. Um,
Yeah.
the lowest hanging fruit right now is kind of with research labs and groups across the country that are interested in this technology and want to start
Hmm.
using it. Maybe Pfizer could be interested, and other big, large pharmaceutical companies in terms of drug discovery and different formulations. I'm obviously not well versed enough to speak on anything like that, but this is the discussions that I've been having with folks that are much smarter than I am. Obviously, you mentioned synthesis of new materials. I think I view that as a very exciting point. And then obviously the
Yeah.
DoD and the government, right? There's going to be commercial opportunities there for companies that can, show viable quantum computing platforms. So I think the earliest lowest hanging fruit for revenue for a lot of these QC companies will come from the government and kind of other university research labs across the country that are just eager to get their hands on something and try something
Mhm.
new.
What is exciting to you in terms of potential sci-fi stuff that could be reality? So, we got the humanoid robots, we got Figure,
Yeah.
so I
Did you see
believe,
that video today that
Meta
they released?
what's that?
Did you see that video that they released today of one of their figure robots? They partnered with OpenAI, and they're kind of, they just launched a teaser video of the robot communicating with a human, and it was quite fascinating.
Wow, no, I didn't see that yet, but I will right after
Have to
this.
take a look. Yeah.
But like I think with Facebook, I mean, like I think probably 6 years ago, they acquired Shift Control Labs. I don't know if you remember that, but like Shift Control Labs, like they have this band that you can wear, and essentially it's like the Force, like so you can actually like move a crane with the sensor, and it like you can actually move like a massive giant arm the same way that you're moving your hand because there's neurons that fire, and it's essentially like an ECG sensor. But Shift Control really really nailed that. So like I think there was a teaser video with Zuck, and he was kind of hinting to that. So I think that could be something that could be really interesting, where you can kind of extend your weight, your capacity, and just kind of your reach. If there's like
Mhm.
something hard to reach, but there's like a robot arm, you could just kind of be like move your hand just like the way that the robot would. So I think that could be really interesting.
Mhm.
Kind of when you think about like Avatar, right? Like or like just kind of like controlling things. And then if you pair that with AI, like it's a set of programs, right? So if you want to build a pyramid or if you want to build something, there's a set program to kind of automatically do that. Because like developing a giant figure could be billions of dollars, but you could have a small person that looks like us that is controlling a giant crane, and following that program. So I think extension of our limbs, using that technology. And then I think if there's AI that can automate that, I think that could support the built world. And then I think it's crazy to think about like extending your mind, right? So if you
Mhm.
want to do an open AI search, I think it was Ray Kurzweil that talked about this a while back. Like you could just think about the answer and know it, versus right now we have to go to Google and search it and then get the answer.
Mhm.
But I don't think Neuralink is something that and Zuck was actually joking about this. He's like, I would hate to be the V1 user of like the first Neuralink, but if
Oh
there's
yeah.
something that's non-invasive, that's kind of like it connects to your brain waves. It's like a, I don't know, a hat or something, or something that kind of connects to your glasses. I think that could be pretty interesting. But
Yeah.
that's what I think could be kind of near future. But like, what do
Mhm.
you think is just kind of next level game changing? I mean, the Vision Pro is cool. We got the spatial computing, but I don't know if I'd be comfortable wearing it all the time.
Mhm.
But I think it's an interesting concept to kind of replace like the home theater.
Yeah, I mean, new computing paradigms like that are just remarkable and fascinating. I think it's something
Mhm.
to watch, kind of going off of that idea of kind of the intersection of computation in our and the human brain. There's been one company that's public. They're not publicly traded, but they've gone public with what they're building, called Prophetic. They're using EEG waves and some fMRI signals to induce lucid dreaming. So just these kind of, and they have a technology that kind of just sits on your forehead and can induce lucid dreaming. I don't really know too much more than just the high level there, but kind of the human brain and computer and brain interfaces that are kind of developed there are remarkable. I think in terms of other things on the forefront of technology or frontiers of technology that I'm excited about is the future of energy. I think fusion and fission are remarkably exciting technologies that if we can tap into at scale, can lead to a whole new burgeoning of different technologies that we may have not even be able to really conceptualize yet. I kind of view energy as like the bedrock of all life and technology, right? Without energy, we're really nothing. So being able to expand access to abundant energy will allow for advancements in technology that our dreams, our wildest dreams cannot imagine, right? Things like direct air capture at scale, desalination, a lot of the bottlenecks behind advancements in technology are solely a function of lack of access to energy, and if we can increase that through fusion and fission, I think we're due for another renaissance of new inventions and exciting times for humanity.
Yeah, I totally agree. Can you double click a little more on urban city planning? So, I have when I think of like the built world, I think there's definitely software that could replace, paper-based processes. And then obviously there's a lot of technology now for people to 3D print homes, small homes, improve, manufacturing. There was actually an investor that came on my show a couple months ago, and that's all he does. He just builds like massive developments with the robot. But tell me a little more about urban city planning. I guess what goes into that? What are kind of the trends that you're seeing? And I also like, is new types of mobility part of that? Like, a new type of scooter, maybe these shoes that can kind of make you move faster. Is that something that you're interested in as well?
Yeah. I think I'm interested in learning more about it. I think I have somewhat of a more contrarian approach that I don't think, innovations in technology offer a much greater advantage over what is currently known and how we've built our built environment for hundreds and hundreds of years. I think a lot of new innovations in mobility, such as new scooters or different form factor electric vehicles, or what the Boring Company is doing with their underground tunnels in Las Vegas. I think a lot of that is trying to find a problem to solve for. I think ultimately the answers in fixing for a lot of the issues with our built environment are practices that have been used for hundreds and hundreds of years, right? Building more density in our cities, building cities that are more walkable, building cities, eliminating zoning and minimum parking requirements. These are things that don't require a whole lot of technology, but offer us an ability to really, get our built environment to the place where it needs to be. So yes, I do. Obviously, as a tech investor, I'm very bullish and optimistic on how technology can shape our world. But I think for the built environment and urban planning, I think a lot of investors are kind of missing the mark there in terms of what are the solutions that we can use. I think a lot of the solutions have been around for hundreds and hundreds of years. We just have to tap back into them. There's a lot of different nuanced ways to look at it, but that's how I'm seeing things right now.
That's great. Well, this was amazing. I appreciate you sharing all these detailed, insights. What's some advice that you would give someone who is looking to maybe pivot their career or just develop their skills to land that first role in venture? Because as we know, there isn't like a degree for venture capital or private equity, right? So maybe walk back through some of your learnings in terms of how you convince somebody to give you that chance, for the internship. And maybe other peers that have probably set up coffee chats with you saying, hey, how do I break in? It's impossible to get in.
I think, clear signs of intellectual curiosity are something that can be really clear to people that are hiring for, junior investors or first-time investors. I think an ability to show that you can learn a lot of different things, that you have the aptitude to learn and learn quickly, that you have interest in how things work in the world around you is really, really important. I guess it lends more so to generalist funds, but for even funds that are, you know, focused in one or two specific verticals, right? You need to have that kind of intellectual curiosity to really want to dig deep and understand things to the highest degree. Also, another factor I believe is important to breaking in is just, you know, having a willingness to put boots on the ground, network, meet as many people as possible, learn how to ask the right questions, and then provide value when you know you may not expect anything in return. I think being able to go to investors, share deal flow with them that's relevant with their theses, and kind of do the job for them without being asked is something that, you know, can help pay itself back in the future, right? So I think just putting out good into the world will always kind of result in good coming back and finding you. So that's kind of how I approached it, and it worked out. And I think that if other people that are aspiring to break into venture can kind of follow similar, you know, patterns, that, you know, the opportunities for them will start to open up.
What about on the job, you know, maintaining your skill sets, continuing your education? What are some things that you've learned um, to kind of really build a good track record, you know, analyzing deals, sourcing, screening? What are some things that you've learned as you've kind of advanced your career, you know, in the space?
I think that, you know, it's important to, in terms of sourcing and screening, like from the sourcing standpoint, I think building relationships is obviously important, as I mentioned before, but maintaining relationships is just as important. I think a lot of, you know, younger investors are eager to check boxes off and say, hey, I know this person, this person, this person. But what really separates you from the rest of the pack is being able to maintain those relationships so that you stay truly tip of mind, tip of tongue, top of mind when other deals come across your desk, right? Like you want to be the first call for everybody on something interesting. So maintaining those relationships are integral to that. I think on the screening side, it's about constantly being flexible and shifting your frameworks, right? Like it's easy to kind of create concrete heuristics for how you view investment opportunities, but the best investors are constantly changing how they view opportunities, right? They take the lessons and little attributes from all the deals that they're looking at and kind of slowly factor this into a greater equation, and being able to have the willingness to shift and adapt. And, you know, even if something doesn't work for you on the first time, it may work for you again. Being able to kind of not close yourself off to a specific you know, signal per se is really important in terms of being able to always be evolving and improving your ability to screen and vet companies.
Can you go a little deeper on how to build good relationships and maintain relationships with people? And then maybe share what not to do as well.
Honestly, one of the best things that I found that works in maintaining relationships is just showing a great ability to listen to other people. I think that's a really lost upon skill in today's day and age. A lot of other people that I speak with in the industry, and this is no disrespect to anyone in particular, but they love to talk and they love to talk about themselves. I think the ability to listen is a really, really important skill. And when you know that someone else is truly listening to you and what you have to say, your affinity for that person grows exponentially. And I think that's a really strong signal in terms of maintaining those relationships. Being known as someone who can listen to you deeply, ask the right questions, ask insightful questions, and then ultimately provide value is really, really important. So it may seem simple on the surface, but it actually lends to a lot about how you can form those really meaningful and strong relationships long term.
It's tough as VCs too, because VCs, obviously, they're always kind of, you know, showcasing how great of an investor they are, how much they, you know, how much value they provide. So, and look, I mean, it's not hard in general to get VCs to join panels and podcasts because they just love talking about themselves. So I think for some VCs, they just have to kind of change their mindset and you know, and also just be able to listen as much as they're kind of on the road, you know, evangelizing their platform, their thesis and all that good stuff. But yeah, I think you're right. I mean, I think just taking time out to ask questions. Also, I think going deeper on their personal life too, you know, just getting to know them as a human being versus just kind of another deal flow source where you just check in and, you know, trade cards, you know, actually, you know, remember, you know, something funny that their kids did or something like that. So I think just building that more intimate, like authentic friendship beyond just the professional life definitely helps too.
That's a great point, Joel. That's a great point. I think that it's, you know, lost upon sometimes, right? Like people like to check off boxes, say, oh, I know this person at this fund. I know this person at this fund. But ultimately, what value does knowing someone actually provide unless you actually have a true meaningful relationship there, right? Like it's almost irrelevant unless you do have that. So I think knowing stuff about their personal life is crucial.
What about, you probably gotten, requests to get mentorship on this. So what about someone trying to pivot their career? Have you come across that where somebody was like, look, they worked in consulting and they wanted to pivot? What advice would you give them?
In terms of pivoting a career, I think is you want to be able to bring in unique market insights into venture, right? I think when VCs are hiring for new people, and obviously I don't really have the experience to speak to this, but just from my own personal observations, I think folks that are hiring are looking to hire people that can bring something new or interesting to the table. So if you're pivoting in from another industry or another sector, I think it's really important to have a deep, insightful understanding of where you're coming from, what are the unique market dynamics of the places of where you're coming from, and how can you apply those learnings and understandings to the current investment strategy. I think that is probably the core of to how, pivoting into venture can be successful. But bring something new to the table, having that deep insight.
No, absolutely. And then, the final topic I wanted to cover, look, you're going to India, which I'm excited about. So tell me a little more about what you're excited about when it comes to India, and maybe some of the other insights that you've learned from some of your other, international investments. So like, tell me about those other regions where you invested, and maybe if you could just spend, like a microsecond just talking about those, maybe something that you've learned, when comparing it to kind of the ecosystem in the US.
Totally. I think a trend that I see in India that is similar to what I've seen and experienced in the past with kind of, Toronto and Israel is unbelievable talent, right? India is a hotbed for engineering talent. Some of the smartest and brightest engineers and builders in the world are coming out of the IITs across the country. And I think being able to, tap into that is an exciting opportunity as an investor. Just solely from a landscape perspective too, you look at India as a place where, rapidly industrializing, billions of people are coming out of poverty in the last 30 years, and that number is, continuing to scale upwards. The amount of internet users, right? In China, obviously in the early 2000s, everyone was excited about investment opportunities there, but citizens in China didn't have access to the same global internet that you and I do. But that's different for India, right? Like a good chunk of the people that we interact with on the internet, in 5 years on a Reddit or a Twitter may very well be in India, right? So I think the opportunity from like a TAM perspective across India is like very exciting. That being said, I think there are a lot of unique headwinds in India that people need to be familiar with. It would be easy for uneducated US investors to just say, oh, India is a big market. There's a lot of people there. Tech is booming. Let's just, throw some darts at the board and hope one or two land. I think that there's a lot of unique headwinds, such as, maybe lack of willingness to pay on a consumer standpoint, or low margins within specific businesses that are important to look at and understand before, you start kind of digging into more. So that's kind of the things that I'm hoping to learn on my visit. I really want to understand like where the bottlenecks are, where the opportunities are, build that network out there so that, hopefully I can become educated one day to make smart calculated bets in companies across the country.
That's amazing. And then the other regions were Canada and Israel. Were those the other two areas that you've started to look at?
Yeah. Canada and Israel. Israel, obviously there's great, technological talent there. The military service really kind of helps people.
Cyber data intelligence, AI. I'd say those
totally really robust ecosystem. Really robust.
Canada, would you say it's mostly B2B SaaS? As kind of like when you look at Toronto, you mainly look at Toronto, or have you looked at Vancouver as well?
Less so at Vancouver. I think Calgary is actually an interesting burgeoning tech hub within Canada. But yeah, Toronto is kind of the epicenter there. A lot of the capital there and a lot of the talent is centered there. I think what's great about Canada is the government is, very supportive of early stage entrepreneurs. There's a lot of federal funding and government funding available for these startups, almost to the point where US investors are shocked when the amount of credits that they can get to hire, to reduce operating expenses. And it makes investing in Canada much more viable when you see the government, how much they're supporting those businesses. but yeah, no, I think the engineering talent in the city of Toronto itself is magnificent. You have Waterloo, as I mentioned, University of Toronto.
Yeah,
Those are two of the leading engineering institutes in North America.
sure.
And obviously, a lot of immigration policy in Canada has been much more flexible over the years. So you have a lot of high achieving, ambitious immigrants from around the world settling in Toronto. And when you get that kind of confluence of people in the same place, I think exciting things can happen.
Mm-hmm. Well, this was amazing, Akira. I mean, I learned so much in an hour. I felt like I've digested like 8 hours worth of investment insight. So appreciate you distilling all of your wisdom into kind of easy to digest information. I mean, selfishly for me, this is how I essentially learn, right? But the audience I know gets a lot of value. So thanks for, definitely coming on, sharing all the insights, and hope you have a good trip. And I want to hear all about it. I want to hear about all the people you talk to in India and what you observe. You can take all that
Yeah,
back to the community here.
much appreciated, Joel. Really appreciate you for taking the time to interview me. This is a lot of fun. I'll definitely keep you posted on the India stuff. Really appreciate the intros there. And if there's anything I can do to be helpful in the meantime, feel free to reach out. I'm always going to be ready and available to help where need be. So just keep me posted. But really appreciate taking the time to chat. It was really fun.
Likewise. Have a great week, and thanks again. Take care.
Fantastic. Have a good one.
All right. Yep. You too.